Good morning, good afternoon, good evening, good whatever it is, wherever you may be and whenever you may be accessing this, the latest episode of Tilton Talks Crypto. As usual, we're going to be covering subjects in the crypto kind of space. The emphasis this week is on how you can make money in crypto. Not the easiest thing for some people, but possible. People have done it. We all know that. Right? And so I'm Martin Tillier. I'm head of research at SmartFi. I'm here with Aaron Tilton, SmartFi's co-founder and CEO, and we have another guest. So let's hand it over to you, Aaron, to talk about who that guest is and get us underway. Aaron, you're muted. Aaron, I think you're muted.
Thank you. That's never happened before.
Actually, I was on a radio show for a while, and one of the guys there used to say that we did radio almost as well as professionals did it. That's kind of how we're doing our podcast right
now. Yeah, almost. I don't think we'd rise to that level, but no, I'm super excited about this episode. One of the goals that we have is to make sure that everyone understands crypto the way that we do, right? We're experts in this space, and we've had all these discussions about it. But I think what we've also learned is that others are interested in taking that knowledge, converting it to whatever is going to give them the best use in their life. For example, we have all our motivations, but everybody else has a little different motivation. Joe is an expert at communications. And I'm trying to give this introduction around why he's here. And this is to help everyone understand better what to do with cryptocurrencies to benefit from it. We know that they can benefit from it. We've seen a lot of other people using SmartFi tools and using other tools that have made a lot of money in cryptocurrencies. And I think that's the obvious thing that interests people in crypto, is that there's a way to benefit somehow financially. And so Joe is an expert in this process, and other companies come to Joe so that he can help them communicate with the people who engage in their products and get the most benefit out of the other products that these companies have. And we want to do the same thing here and help others do that here. Joe and I have known each other for decades. And I happened to bump into Joe at a conference at Silicon Slopes, one of the largest technical conferences in the state, dealing with technology and finance and a lot of other products. And he told me a little bit about what he was doing and still in the communication space and has been there for years. And I told him a little bit about what we were doing in crypto. And he knew that we were involved in crypto. And maybe Joe can tell a little bit more about this. But it occurred to both of us that there were some things that we could do to allow others to benefit more in understanding and communicating this process better, and how to benefit and how to engage in it. So maybe Joe, I'll open it up to you in terms of what you saw and what you understood, and then from your perspective, and your perspective as somebody who has little to no understanding of how crypto works, but there's some benefit to it, and then you express that to me like, hey, what do I do with this thing? What could I do with it?
Yeah, that's exactly it. When Renanto, you were talking about crypto, the first thing that came to my mind, look, I'm a novice. I know what's on the news, and I hear about the, great, soars of Bitcoin and people that make money. And then I hear about people who've lost money, and I understand that it's there. I don't know how to capitalize on it. And so the first question I have as a rookie from the outside is, okay, how do I take advantage of this in a way that benefits me? How do I participate in it? Because I think that digital currency is definitely going to be the wave of the future. It is all the benefits that are there. It's going to happen. There's going to be more and more of it. The question is how, and can my participation in some way shape that? And can I benefit as I do that? And that's really the questions that I think everybody has. And there's 100 more, specifically what's going to happen with this as I participate. So, how do I make money in this? How do I participate safely in it? That's the question from the outside. I'm curious. I don't know enough. Educate me and simultaneously show me that I could do this safely and gain value.
Yeah, and I also want to emphasize that whether you're new to crypto like Joe, or you're an advanced, experienced user, right, and been involved in it for years, we're going to talk about concepts that are going to be, I think, enlightening and also simplifying to understand this process and the tools that other people have used with SmartFi to take advantage of this, right? So it's not just for the beginner, but it's also the advanced user that has seen a lot of the benefit. And we'll talk a little bit more about that. We've got customers who have been in the space for years. When they come to SmartFi and realize what we're doing, they kind of, they say, gosh, where has this been the last, 10 years that I've been involved? Or, I've always thought it should do this. And now I found a company that actually has tools that do this. So we'll talk a little bit more about kind of those little secrets, the advanced things, but they build on the foundations of very simple concepts that the new user or early adopter can both use and still progress and benefit. So first thing I would do is, when I get these questions, like you just asked, I actually sometimes answer that question with a question. What is it, Joe, that you hope to accomplish by engaging in this process and looking into cryptocurrencies and trying to gain that knowledge? What do you want to do with this first before we try to design something? You need to have the end in mind.
Okay. So two things that come to mind immediately is, one, I want to learn about it. I want to understand it. First and foremost, that's my nature. I want to learn and understand this thing in enough of a sense that I have confidence to be engaged or make a decision that, hey, it's not for me. So once I understand that, then the question is, how do I participate in a way that's beneficial to me, simultaneously safe for me? I don't want to be engaged in some spike that disappears. I want to be engaged in something that's sustainable, that has value now, in the near future, and the long future. So learning about it, can I engage with it profitably and safely? There's my goal.
Yeah. And that's a common thing that we hear, or that other people express their need to make something that's consistent and reliable, right? Doesn't matter if you put some money at risk and then you lose it all, what's the point, right? Mm-hmm. You don't get to do with it what you wanted to do, right? And if you go look at the information that's available about SmartFi, we won't go into a lot of that detail, but we took the feedback that we heard and we understood, and also from our experience in the beginning of utilizing cryptocurrencies, and from other people that were successful using cryptocurrencies, and took all of that to inform the structure of what we built, right? And what you have access to. And this safety first approach is really the hallmark, and what we find is probably the thing that people want most is they want some assurance, right? People don't want something that, to try to guarantee success no matter what happens, because I think everybody understands that's not possible. That's not reality. But an assurance that there's a better way, a safer way, right, to engage in this prospect of gaining value somehow, taking some sum of money and making it worth more, so that you can prepare for the future. You can either, you're buying a house or whatever it is you're going to do with this, and just an investment or retirement. All of those things are possible, and other people have done it. And we've watched that successfully happen with our customers and with other people that have come on this journey with us, become part of the SmartFi community, and what we've done ourselves. I think you saw an image there. Maybe, Paul, you could pull that back up. This Silicon Slopes image. And I want to help people to understand the level of expertise just a little bit that they have here at SmartFi. So there I am with a group of people. That's actually the governor of the state of Utah, the lieutenant governor, Representative Tillier, Representative Moss, a lot of people that worked on some bills at the state. And this is the signing of these bills. The state asked us to help not only in the digital asset task force that we're on now, but in this process, we help craft some laws to make these things safer, and help people gain more assurance in the state's recognition of digital assets. This is
Aaron, just briefly, that picture looks like a lineup of who's who on Tilton Talks Crypto, right? We've got Amelia in there.
Yeah, we've had quite a few of these people here expressing and teaching kind of these secrets that they've learned. There are a lot of guys up there with a lot of high net worth involved in this process and involved in crypto. And some of these people will come on later to help you gain this knowledge. But all of this knowledge and information doesn't work unless you have a clear vision of what you want. So we want to make sure that that's clear. I think I understand what you said in terms of safety kind of first, and understanding and learning so that you can make your own decisions. You're empowered to understand this at a level like an expert is, but not having to wait 10 years or 15 years to get that expert.
Now I don't have time to master everything. I want to be able to come to an expert that I can trust and learn quickly. So in a nutshell, what is this thing that I may be able to benefit from? How would you express that? I have a basic knowledge of it. I'm sure you could summarize that far better than I can. From a layman's term, from the outside, what should I know that lets me understand this crypto movement?
Yeah. And the simplest way to explain this is that the average person can take advantage of what's called the network effect, right? And I think people may understand that. It becomes evident in the internet is a good example of that, right? The internet, when it first started, was the ability to transfer information anywhere, anytime, any place to anyone, right? And then take that information and make it valuable somehow in terms of interactions, transactions, learning, controlling information, or providing it, right? And basically allowing anyone to get it is a multiplier effect. It creates value, right? What blockchain technology is, it's the ability now to transfer value, not just information, but value, and store it and give it to anyone, anytime, any place, anywhere, right? And so you're empowered to engage in financial transactions just about with anybody in the world, as long as they have the same access, right? So it's no longer just about transferring information. It's about actually transferring value. And the way that that's been done previously.
When you say value, you mean like the equivalent of currency, money.
Exactly, right?
Okay, because I mean, value could be, that's so broad. It could be, ideas and images. There's value in all that stuff, but we're talking literally cryptocurrency. So it's like, I can use Venmo to do that kind of thing. I can send money to anybody, anywhere, anytime, and that's pretty cool. But this has got a whole new layer to it. Tell me about that.
And I'll make one little correction. Actually, you can't do that with Venmo. Venmo is only for people in the United States. It's illegal. It's not recognized outside of the United States, right? Okay. And it is centrally controlled by banking, right? Without a bank account, Venmo is useless. You don't actually have access to Venmo, right? And that is the big difference. Well, I'll give you an example. We have customers and people that are engaged in our community. And I guess I would say in the beginning, sometimes people start off as a customer and then they become kind of raving fans of what we've been able to do by lending them money. And I'll talk about that a little bit. But we've been able to lend money to people all over the world without any underwriting. That's unique, right? That's different. And they benefit.
Without underwriting, how do you loan safely?
So the value of what's being transferred on these blockchains is something that they send to us. We hold it as collateral, right? And then we send them dollars in the form of something that is spendable, that has banking involved, that has all of these other aspects that are centrally controlled, because that's what most other people, so if you're going to pay bills, you need to do a payroll, you need to buy equipment, all of these things. These businesses benefit from what we do, and we benefit from holding that collateral as security.
Okay, so let me see if I got this. So if I were a business and I needed funding, actual funding to pay payroll or whatever, expand, buy some new equipment, I could come to SmartFi and borrow that money. But on the other side of that, somebody somewhere is buying these tokens. And when they buy that token, that's what ultimately is going to provide the funding for the loan. And simultaneously, you're receiving collateral. You're receiving something that backs that. So that's where I, as a user, would get a safety factor. Is that what I'm hearing?
Yeah, that's part of it. And we'll talk a little bit about, there's some differences between Bitcoin and Ethereum, the people who use Bitcoin and Ethereum, and then also those people who use SmartFi tokens.
Okay, so what's the difference?
Yeah, the big difference is that SmartFi tokens are backed by the loans or the value that we have made to other people, right? When somebody buys the token, the proceeds or the dollar value of that token go to make a loan. So it's very similar to a transaction you're already used to, like at a bank.
That made sense to me. Now, and you give that loan based on some form of collateral.
Yeah, and we've engaged in multiple transactions that provides enhanced safety for the people who buy the token. One of which is we have real estate, and most of our loans, in fact, all of our loans typically have something to do with a business somehow, right? We don't do consumer debt. We do business, small business loans, right, and commercial loans. So real estate, equipment from people, they want a backhoe or a trackhoe or a car or a stove for their restaurant. So we'll lend up to a certain level of dollar amount, typically between $100,000 and $200,000 for a small business. And I'm going to tell you why that's super important about the safety aspect of this in just a minute. I'm going to come back to that. But we have real economic growth and credit creation taking place in the form of economic GDP, right? And GDP means gross domestic product. People are making something, they're doing something, which is safer than just trading, which can be a zero-sum transaction where one person benefits and one person gets taken advantage of. And that's typically how that works, right? That's not happening with what we do with our community, with the people that engage in our products are actually creating value, right, through lending, much like a bank does, right? We're not a bank.
The guy borrowing the money the guy borrowing the money is actually doing something with its productive. That's GDP.
Guys,
let me track which immediately goes to work, digging trenches, excavating ground, and they get paid for that enough that they're able to make their loan payments, feed their family, employ some people, and life is good. That's what a great
guys, let me just jump in here. Okay. Right now, we're telling you a lot about how we make money. Your question was, how do you make money? So as the kind of whatever I am, the moderator or whatever, let's get back to that. How do you make money? You know how we make money, right? We make money by lending to small businesses and all the stuff that Aaron was talking about. And that's important because that's the background to how you make money. But let's get back to where we want to be, which is how do you make money?
Yeah. So if I buy some of these tokens, which ultimately funds that loan, obviously a portion of that's coming back to me.
Yeah, and addressing the safety part was, hey, what's backing this? Now I have this asset, I have this thing, I hold this token, right? And where do you develop the value, or where can I go to make it worth more? What makes it worth more, right? The network effect, going back to this discussion, when more people hold it or more people have access to it, the market creates value around it when they understand that there's something backing it, right? And so when Joe buys a token, now he can go take it into the marketplace. And after progress or the loan volumes increase and the value is increasing in this process, other people want it because it stores as value and it goes up in value, right? For example, the token, when we first came out, it was worth about 70 cents. We had millions of dollars worth of this token that other people bought, right? They bought it from us because they believed in what we were doing and they felt that somehow that would have an advantage for them. So they bought the token in this smart cycle price. We won't go into a lot of detail about this other than to say that it has a credit creation function, which is how the value increases. So Joe can then take this token and use his knowledge He knows what price he bought it at. And if everybody else is buying it at a higher level, then he could sell it into the market at that level at certain times, depending on what his goals are.
Okay, so I got a question now. So
Yeah.
it appears to me there's two ways that I, as an owner of a token, would make money, but I'm not sure about this. One way is I buy the token and its value goes up because more and more users go up. Like anything, it becomes more and more valuable. So I buy a token, I could sell it later at a higher price if that value trend goes up. That's one way.
Correct.
Do I receive anything other than the trend of that going up? Like, do I participate in the interest that on the loan?
No, we don't do that, right? And there's a very specific reason for that. That's called an investment contract that the SEC would look at and say, that's a security. We don't sell securities. We don't promise people that we're going to pay them interest, because that, and that's going back to what is the difference between Bitcoin, Ethereum, SmartFi, and cryptocurrencies in general, is that they are run, it's a network that is run by people participating and speculating in these benefits, right? And they use their own decision-making and their own knowledge to unlock that value. And that's what we're kind of teaching today, right? And showing people how other people have done this, people who belong to SmartFi, other people who have used Bitcoin. That's that value. You have to use your own judgment and your own skill. But we take the approach, Joe, I would never recommend that you become a day trader. Do you want to be a day trader? And when we're talking about how
that, I have my own work to do. I'm plenty busy. Thank you very much.
Right. What most people get pitched on is how to come in and use technical analysis on the market movements and predict what'll happen and try to, become Nostradamus and build the crystal ball and come out here and try to guess what everybody else is going to do so that you can bet against them. That's not a value proposition for a win-win scenario, right? It's a win-lose scenario. You have to take advantage of what the market's doing to oppose somebody else to make money. I don't like that proposition. That's not very helpful, right?
Got it.
And other people don't like that proposition. Just like you said, you've got things you got to do every day. You're engaged, and that's how you already make money so that you can invest in a cryptocurrency. You got to keep that going. All right. So we used those needs and that want of simplicity and ease of use to design a second characteristic for the SmartFi token, which was 100% buyback guarantee, right? Starting with safety first. We're going back to the end, the beginning, right? The first thing you said is, I wanted to be safe. I want something consistent. And that buyback guarantee works similar to a bank. When you take a bank $10, you put it in the account, you expect that any time you could go back to the bank and get your money back, right? Doesn't mean you're going to get a profit. In fact, it probably means you might lose a little bit, right? Because deflation, or inflation, sorry, there's not a deflationary aspect to it. So with what we're doing, we've taken the best of cryptocurrencies with the network effect and the best of a banking like cycle and combined them into a token where people can benefit from the value of what would normally accrue to the bank now goes to you, not in the form of interest, but in the form of growth.
Let me just say here, we have the SmartFi token is over a year old now. So there are people who bought at the 70-cent issue price who, even with current volatility, are still, showing a profit over that time period. There are also customers of ours who bought on the way up, because the initial thing that SmartFi token did in the market was it jumped. And they may be looking at a token that's worth less now than when they bought it, conceivably. Those people are now utilizing that 100% buyback guarantee. Okay? There are people out there who are doing that right now as we speak. So some of the... Let
me clarify, when you say utilizing, you mean they're relying on that feature as safety for the value preservation.
It's doing what it should have done for them. It's providing them with that safety net. Right?
That's right.
We believe what that, but for you, that might not be, the timing of that might not be right. There might be a time for you 14 months down the line, when you need the money that you've invested in SMTF and maybe the market's down with some of the periodic volatility. What SmartFi says to you is, we can do that. We can cover you for that. There is a safety net around SMTF that you can utilize. So it's not saying, well, we think it's going to go down. We're saying we're realists and you need certain things from us. We're trying to provide them for you.
Okay.
Yeah.
So that's the part of hopefully the education, is that benefit to our knowledge only exists with SmartFi, right? And that knowledge that you have now is that you're aware that, hey, there's a token that has the ability to preserve the value of what I have, not because I'm some expert trader and I'm going to go out and wrangle this whole market and have to do all these things, but because I can simply do the things I've done before and engage in a transaction that is very similar to a bank-like structure. Preserves value.
So, this is making some things become more clear in my brain. As I think about this, if I want to participate in crypto, how do I develop a strategy that's effective? I mean, I can go buy Bitcoin, and that thought's crossed my mind several times. Especially when it dropped, it's like, okay, now's probably the time to buy because it's probably going to come back. I didn't, because I'm not a day trader and I'm busy doing my own day-to-day work. How would I go about developing a strategy to, begin softly, easily, carefully, smartly? What do I do?
You're kind of in my area of expertise here, Joe, because I'm the market guy in this context. I've been in and around and making a living from financial markets for 40 years. I currently write every day. NASDAQ publishes an article from me pretty much every day. And I get whatever it is, tens of thousands, hundreds of thousands of people that regularly read what I write. Not bragging, just establishing my bona fides when I talk about markets.
Somehow they're benefiting from that knowledge. They're utilizing it. Yeah.
They are. And so here at SmartFi, I bring that to the table. So when you talk about strategies for investing and almost essentially trading strategies, even if it's long-term, that's kind of where I come in. So a couple of points that I would make. Firstly, trading and investing are two different things. We've talked about this in previous episodes, and I'm sure we'll talk about it again. If you're not interested in being a day trader and giving the time and the effort and the research that's required there, you don't have to benefit from crypto, to make money from crypto. You can do it in a way that suits you. And what I mean by that, most people like to just do things and set them and forget them, right? It's a well-known technique in stock investing. You just buy it and hold it, right? You don't always have to do that in crypto, but what you do want to do is kind of set and forget in the sense of the timing of when you come in, because it's a volatile market, and that creates a problem for, if you're interested, when do you buy? Well, the answer is you buy over time. So it's something that's called dollar cost averaging. I know it's something Aaron's very keen on. I am too. It's just it's actually, there's some people putting it under fire right now, and their arguments are crazy because they're looking at it as like, well, it hasn't worked over the last 3 months. Well, of course it hasn't, because the market's kept going down, right? But if you look at it over an extended period of time, dollar cost averaging into a long-term investment is always a good idea. It helps to control your emotions. It means that you're always at some point buying at or close to the bottom, right? Which is always a good feeling. If you buy in installments, that's what dollar cost averaging means. It's one of those terms that market people use to disguise something very simple and make it sound like we're experts and we're smarter than you, right? And so what it is, it's just splitting up your investment into, say, 12 things and doing one a month for the next year. So if you were investing 12 grand, you don't buy 12 grand right now, you do 1,000 a month over the next year. What that does is it smooths out that volatility. If after the first 1,000 you buy, everything goes up, you might kick yourself a bit and say, man, I could have bought all 12,000. You say, hey, I bought some at the low. If the market goes down while you're doing that, you think, man, I'm buying cheaper and cheaper every month. This is great. Right? The net result is you're in at an average that's kind of fair, and you're set for long-term investment. So that would be strategy number one, dollar cost averaging. Right? Strategy number two would be, don't chase the news. Don't turn on CNBC in the morning and hear somebody stand there, a Jamie Dimon or somebody who's been telling you crypto was going to zero from when Bitcoin was $200 and was telling you when it was 70,000, and not saying, "Hey, I got this completely wrong," but just telling you again that he, don't listen to those kind of people. Find a crypto investment, and I think SMTF is one. That's why I'm here with the company that offers you a long-term chance of appreciation based on the way it's designed, based on the utility of the token, what the funds are used for, where they go. If they go to buy, this is one of Aaron's favorite phrases, but if they go to buy the owners of the company Ferraris or Lamborghinis or something, then that's probably not for you. And we've seen projects that have been based on that kind of model, and they've gone under. If they go, as they do for us, to do something with SMTF, to do something specific, which in this case is fund loans to small businesses and help the whole economy grow and do all of that, then there is some value to it beyond its current price to you. And that's the point, is to look for something that you believe in that has value beyond its current price. And when its current price then becomes irrelevant. So dollar cost average, not irrelevant completely, but you know what I mean, much less important. So dollar cost averaging in over a year into something that you believe has a solid foundation, they would be my two key strategies for you for you investing in crypto.
What have people seen as return? I only generally know this. I'm completely unclear right now. What have people earned on crypto? What have they earned on SmartFi? What have they earned on Bitcoin? What have they earned on the others? What does the trend show?
Well, let me back up just a little bit, because I want to understand a little bit more about the question, right? Because we could answer that question a variety of ways. Depends on what the time frame is. Somebody bought it yesterday versus they bought it 10 years ago, right? That the results are relative to what you've done. So as a new somebody looking at crypto, new to the space, how would you be approaching this, and what would you be looking to accomplish with it? Because there are multiple things that other people have done that might have the same goals, and I want to understand your goals a little bit more. What is it that you want to accomplish with it? And then I'll tell you what they've been able to accomplish or how they did it.
Yeah. Well, so if I participate, I don't want to do it just for fun. Learning has some value. I want to make money if I do it. I want to have increased value.
Okay. Here's the first thing I would also ask another kind of question. You don't have to answer this here, because then, there's a bunch of people watching, and this might be a little bit more personal, but when we talk to other people who have the same questions, and also when we talk to people who have already done this, one of the common themes is that they set, or we ask them to set, an amount of risk that is acceptable. Meaning, if you are going to invest some amount, and you kind of intimated this about, I don't want to be just trying this out or doing it for fun. Sounds like you want to have some serious results, which means maybe a higher notional value. Let's just pick a number out of the air, right? Somebody who wants to buy a house, or wants to buy or retire, or has these kind of motivations and goals, is going to be talking about hundreds of thousands of dollars, maybe even millions, right? We have clients that invest millions. We have clients that do 10,000, a variety. Their approach is similar, but different. So if you're an advanced user versus somebody who's just new, you want to assess, what are you going to put at risk? And let's say you do $10,000. And this was, Martin talked about this briefly, about dollar cost averaging. That means different things for different people. Some people, it means $50 a month. Some people, it means $100,000 a month, right? I'm going to give you an example of a guy who did $400 a month. He has time on his side. He started in 2011, and he was buying Bitcoin. He was the average guy. He actually installed conferencing equipment for a living. So he pulled cable, wasn't like some fantastic day trader, didn't have all these other things, but he was the average guy that understood the principle of dollar cost averaging. So he bought $400 worth of Bitcoin every month for years. Didn't matter what the price was. And he told us that his first Bitcoin that he bought was at $3 per Bitcoin, right? So you equate that now to maybe SmartFi, and I'll talk about that here in a second. But he did this over years, $400 a month. And when we met this guy, and in fact, his name is Doug, and we've got some videos, and we're going to have him on later to talk about his experience, right? And give people advice on what to do, how to do it. Because also people really need advice now that he's in this situation where he has an enormous amount of wealth. There's Doug right there. And he's talking about what the tools he's used with SmartFi. He was one of our very first customers utilizing the wealth that he had created out of this dollar cost averaging. But so we're back to Joe. What can Joe do? Joe can pick an amount that he thinks he's going to do every month and buy it regardless of what the price is. So you average in, and Doug averaged into the market over years. And obviously, if you're buying a $3 Bitcoin and now it's trading at 20,000, that's a good return, right? He bought a lot of Bitcoin.
Yeah, that's good.
That's a good thing, right? That's good. So whatever you want to do, buy a house, he can buy a lot. He's bought lots of houses. He has a boat. He's bought all these things. He's got multiple companies, and our tools are helping him manage that now as well. So the advanced user uses SmartFi, but so does the beginner, right? So the goal for you is to figure out what that number is. What risk can you do? There's another tool that I would recommend, and it has to do with credit. I talked to quite a few successful people, and one of the tenets that they adhere to is if you can use other people's money, and buy on credit, but sell for cash, that's the goal, because you're realizing a gain utilizing the value or the leverage of somebody else's. But there's risk associated with that, right? And so we don't advise people to go out, leverage their house, or do all these things. Don't do that. That's not what I'm talking about. What I'm talking about is taking something that, if you want to get outside of your cash flow, you have to take some level of risk. And it might be just cash flow. You've already saved, you've already deferred buying something so you could save it to invest it in something, right? You've created credit. So take that dollar cost averaging and sort through how to do that. Or other people, what we've seen in their businesses, instead of paying for something outright, they have saved up and then they buy the investment. I'm sure there are plenty of things that you've done before where you've saved capital, you have investment capital, but instead of investing in your business, which might be a sunk cost, you used it for something else for the time being, and then went back out, liquidated that, and bought or invested back into your business. That's why people buy crypto, come to us, give us the crypto, then we give them 50 cents on the dollar or 70 cents on the dollar to make their O&M payments on their business, but then preserve the capital value years to come. Because as long as the interest that is being charged on the loan is less than the value that's appreciating, you're gaining capital appreciation, you're gaining value, you're winning, right? So those are tools that we've advised guys to do. You have to set that level. So you would have to come up with in your mind, Joe, what's the
so I need to have a level that I'm willing to purchase each month. I've got to look at my discretionary cash and say, all right, I got this much. I can do whatever I want with it at the end of the month. And I'm going to put some of this just in a bank account. I'm going to put some of this. I'm going to buy some SmartFi tokens. I may buy some Bitcoin. I may do stock. I've got all these options in here. I may buy a new, toy, whatever I choose.
I'm so glad you brought that up, because it actually ties into
discretionary cash, and then allocate that in a way that's smart over time, consistently, so I get that dollar cost averaging effect. And if my performance is like others' performance, there's a strong chance I'll come out ahead in the deal.
I'm so glad you brought that up, Joe, because there's a kind of an interactive element to what we do here. We have quite a lively kind of group on Discord and Telegram and all over the place.
We need to get some of these questions. These are great questions.
That's what I'm getting to. That's exactly what I'm getting to. And we've got some questions, and one of them actually does come to that. Richard Skido, is it, on Discord, says, what minimal amount of initial investment is the most effective in the project for optimal regular profit? The only honest answer to that, Richard, is what you are comfortable with. And that sounds like a cop-out, but it's not. Any investment, whether it's in SmartFi, whether it's in Bitcoin, whether it's in Apple stock, whether it's in treasuries, any investment, and I'm not talking trade, investment, has to, the amount of dollars that you commit to it has to be based on the amount of dollars on which you can afford to take a short-term loss, and you're comfortable with not touching for the next X amount of time. And so
Yeah, I often say, if it will impact your lifestyle negatively, right, and it will impact your family.
Yeah, for me, I'm not going to spend anything that I couldn't afford to lose. I've got so much discretionary income at the end of every month. And, that varies because some months are better than others. And sometimes other things that I've put money into have come back to me handsomely.
Yeah.
So I've got options in there. So I should just choose some pattern that's comfortable, that I can put it in there and leave it for the long term. That the dollar cost averaging, that makes sense to me. Every time I've looked at that, don't chase the news. Great advice, because the news, it just scares you. They're not there to inform you. The news is there to get ratings and sell advertising dollars. And since YouTube's stolen almost all of their advertising, and Google, now they're all selling products on today's deal. I mean, that's just crazy. Media is just a mess. So that's great advice. Do not follow the news. In fact, it'd probably even be better advice to not listen to the news. So
all right, we're coming to the end, and I do want to get a couple more of these questions in. I'm sorry to keep interrupting you guys, but that's kind of my role.
You've answered mine. You should take those questions I see in the chat.
So Allison M2000 on Discord asked, this is one that really interests me. What is the ultimate mission that SmartFi is trying to achieve in the crypto field? Obviously, the crypto market will experience huge growth in upcoming years. I like the fact, Allison, you think it's obvious, because I do too. Right? So which role would you like to play in this sector? And I think that's a really interesting question, because we've talked a bit before about people's need for, or people's desire, people who speak to us, their desire for some smarter, safer way of getting involved in crypto. Aaron, you're the man here. Do you see that as SmartFi's role going forward? That SmartFi offers that I'm not going to say a safe way of investing in anything, because there is no such thing, but a safer way.
Here's what I would say, because it would be easy for me to sit and go, SmartFi should do this, and we do that, and we're going to do this, and blah, 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 and go along. And that would just end up being kind of noise, right? What I'm going to say is our role is to empower the people who join our community, along with our tools, to do what they see their role is in this, and what we see their role is, and what they've communicated that to us, like Doug, be like Doug, facilitate the transfer of knowledge that Joe talked about. What can I do? How can I be educated about what I need to do with crypto to engage in it safely and profitably, and benefit from it? That is SmartFi's role. And so we take our learnings, right, and we engage with the community and build the necessary features to build safety and what we call speculative value, right? And this is what people have told us that they want. It's what we wanted in the beginning as well. And it's what we see that other successful people have utilized. Sometimes they don't know how they've done it. Sometimes they haven't captured it the right way. They lose it, they'll lose their money. But we've taken the good and the bad and made something better. And that's what we see our role as, is making better tools for better outcomes for people engaging in crypto.
So on that kind of note too, I think we've kind of answered this over the last 45 minutes or so, but Jacob SF on Discord asks, due to market instability and tax legislation, especially in India, levy 30% tax and 1% TDS. I'm not an expert on Indian taxation, so I'm not going to get into the implications of that, though I do have feelings about it. But what is the best way to make money in crypto? And that's kind of what we're trying to answer today. Will SMTF be helpful in this situation? If yes, means how, is Jacob asked it. We believe it is, Jacob. If and your question is actually a good one, and it's one that everybody really wants the answer to, is can we help you? And I think we can.
I have an amazing example of that. This is one of the problems that Bitcoin miners came to us looking for a solution for, right? And it was the taxation problem. Because when you sell cryptocurrencies, you're taxed like property, right? And then that goes to your income tax basis. I want to get all jargony about taxes and how that works. But when you borrow against the value of the collateral, which is in this case, either Bitcoin or Ethereum or whatever we do and engage in the lending process, you don't incur taxes because it's not a game. But you get to unlock the value of that dollar value to go do the things you want to do without being taxed. And so our very successful clients utilize that all the time, millions and millions of dollars worth of loans to not have to pay taxes, because it's the same thing that you kind of do with a house. If you have a house that's worth X and you sell that house, you incur a tax liability, right? But if you borrow against that house, right, you don't incur the tax liability. And then you can use that to go do other things that you want to do. Now you need to balance that with risk and the appropriate structures we talked about, right? Don't invest money that you're not willing to lose, because if you lost it, your house will now be gone, or those kind of things. So don't do that. But the guys we're talking about and the people that we've helped do this from very small levels, $10,000 loans up to, we've done loans that approach 9 digits, right? And all of them have the same thing in common: utilizing our lending structure to delay tax complications or implications, right? Which is your right, and it's perfectly safe and legal to do. That's one way to utilize the tool. You have these 2 basic tools that we have that are extremely beneficial: borrowing to create value, right, and amplify your value, and then also credit creation. When you hold the token in the right market conditions, and we've seen that over time, it's proven to create value. But you can only unlock it in one of 2 ways: either you sell it or you borrow against it. And we have both tools at the right time to maximize profits and minimize expenses. And that is SmartFi's role in the market, is to provide these kind of tools for the average person to become experienced and become advanced in this. They don't teach you this when you go to the bank. They don't teach you this in school. They don't teach all these things at these other places. You have to get that from experts who are actually doing it. In other places like a bank, it's a zero-sum game. They have no interest in helping you do some of these things because they want to take it and benefit for themselves. They don't share those benefits. At SmartFi, the network effect amplifies that and allows the average person to participate in growth. That's what we see our role as. And that's one of the examples of the tax, how you can be strategic about your taxes.
Okay, so we're coming up against time, because that's what happens when 3 people get together and start talking about something interesting and potentially profitable, right? That's kind of where
Absolutely. Get passionate about
becomes the enemy, right?
So I don't know if it's done and how people benefit. There is a way to do this. It's for the average person. It's available.
So, Joe, I don't know if we've answered your questions. Hopefully we've answered
Yeah,
some.
I definitely have a much better understanding of what this is. This has been enlightening. Very good. Thank you.
Yeah, well, we between us, Aaron and I have a lot of experience, and we come from different areas. And
well, I'm going to
we
ask
will
Joe
share it. It's
one question here. I know but Joe, what are the next steps? What is the next thing? Now you have some information, you have a perspective. Mm-hmm. What are the next things that Joe is going to do to prepare himself and to engage in this value proposition? Right?
So I'm going to spend a little bit more time. I'm going to pick your brain more. I'm going to read more. I'm going to analyze and just look at my current assets, my holdings, and see if I want to readjust and, if there's potential more value by including more crypto into my world and less of something else. That's what I'm going to do right now.
I think that's a pretty good note to end on in some ways, taking the next step.
I would take that one step further. The successful people that we see in this space, right? There is a point at which, you get this over-analyzation, right? The successful people that we've seen and what we've experienced as well with the average person or the advanced user will engage in the learning process, but then take the next step, a small step, if you're not sure and you want to get real world experience, then start at a very low level, dollar cost averaging, and do it, because you've got to understand this for yourself. There's so much, you could spend a lot of time analyzing it, right? And that's what technical traders do. They go out and trade, and they want to learn all these technical things. But the only way to really gain an understanding of what you're doing is sometimes to actually do it once you've de-risked it. When you're at that point, right, you got to set a level that says, okay, at this point, I'm going to take action, right? Otherwise, a lot of times it doesn't happen and you miss out. That happens. We see that all the time, right? With this prospect, when everybody sits and says, I wish I was like Doug. I wish I had bought Bitcoin 11 years ago and bought it for $3, right? So the paralysis of analysis sometimes is more detrimental than actually taking that next step and doing it, right? And that's what we've seen most successful people do. Is this is a business of some risk. De-risk it as much as you can and then engage in it and continue to learn. So Joe's now going to become a weekly watcher of our podcast. Hopefully, and we'll have Joe back on. We want to have Joe back on so he can share with people what his experience has been, right? Build that trip, build that view that at some point in the future, Joe will have a substantial portion of his portfolio in crypto in a year or 2 or 3 or 4 or whatever that is. But you have to start today. Once you feel like that, I'll talk with you. We'll get it going. But there's a level that everybody can participate at, from the smallest amount to the largest amount, and get that experience. So you got to make that decision when you're going to do it.
Well, hopefully we've given you, Joe, and anybody listening, watching, whatever, some useful information. We didn't get to some of the subjects that I thought we'd get to in the more technical aspects of things, but I think that the information that we gave was probably more useful to more people than if we got into that. I'm sure there will be times in Tilton Talks Crypto down the road where we will get more technical about it, but basically understanding the why crypto is worthwhile and what value it offers to people is much more important in a way than the technicalities. So hopefully we've answered some of those questions for people, or enlightened some people, even maybe more experienced people, about our attitude to it and about how maybe they should be thinking about it. I will say a couple of things to close. Firstly, if you've enjoyed what you hear, we're slaves to the algos, same as everybody else. You talked about day traders; they're all slaves to the algos, to the algorithms. And from our perspective, liking what we say, commenting when you're here, subscribing to the channel, all of those things help with the algorithms and help to build us. And we want to build it because we want to get our message out there. We believe our message is important. We believe it is beneficial to the listener, and people that, the feedback we've had on Tilton Talks Crypto so far from people with lots of experience and little experience is just that they find it interesting, informative, and helpful. So hopefully,
I would add, if you feel like you've learned something today and you've got knowledge, and we think that that's the value of the show. We hope that you find that that's the value of the show. Share that with somebody. You've now gained some knowledge and some information that is valuable. And if you share that with other people, they'll look at you as valuable and also engage with you in this journey, right? I know with Joe's probably going to go out and talk to a few people, right? And maybe even share with other people what he's learned, right? Bring them to the show, engage in the dialogue so we can all learn and understand. The whole point of this podcast in the first place was to better communicate the value, the benefits that are here. And that's part of it, sharing that. So share that with everybody and then come back, ask the questions. We want the questions. That's the way that everybody benefits from this process. We are a community. Grow the community. It's for everybody's benefit. All right. On that note, gentlemen, I thank you. Thank you for your time. Thank you for your expertise. Thank you for your questions. Thank you, everybody out there, for your questions. Sorry if I didn't get to yours that was submitted. But time is our enemy, and we've already overrun, as we always do. Yeah. But anyway, thanks again. Thanks for listening, watching, whatever, whenever, wherever. And we'll see you next time on Tilton Talks Crypto.